All right. Good afternoon, everyone, and thank you once again for joining us today for this week's BizTalk Thursdays. Today, we're going to talk about accessing startup capital from the economic stimulus funding that was released a few weeks ago. And today, of course, you have myself, Darrin.Campbell, one of the co-founders of StartUPs United. Alex.Linares is not here, but he's my co-founder of IndieONE. And we also have Peter.Llaguno. So say hello, Peter.
Good afternoon, everyone. How you doing, Darrin? How's everyone, Janelle, in the SBA land? Awesome.
Busy.
I can imagine. I don't think you guys have rested in about a year now.
It seems like that, yeah.
Yeah, it's gonna get worse probably before the end of the year. Okay, so like I said, I'm the founder of IndieONE, which is a live media content platform, which basically focuses on independent content creators. And I'll let Peter talk about his company. He's one of the co-sponsors of this project.
Thanks, Darrin. I'm as Darrin said, I'm Peter.Llaguno. I'm the CEO and co-founder of Culper Technologies. We're an electronics manufacturing company. We're developing the residential distributed temperature control system, the next generation thermostats, if you will. So that's the story on us. Darrin?
Okay, so moving on today. Just to give you a little insight what StartUPs United is, our goal is to educate entrepreneurs on the resources that are out there to help accelerate their business. Peter and I, of course, are entrepreneurs ourselves, so we have a lot of struggles we go through. So we're trying to find ways to help you guys to kind of, navigate this world of entrepreneurship. This is also an opportunity for you guys to connect with each other and with us and other entities that are out there to help entrepreneurs. And ultimately, our goal is to pay forward to help entrepreneurs find a way to find success and then help grow the community. Today, as Peter already said, our guest is Janelle Hines. She's a Deputy District Director for the South Florida United States Small Business Administration. And of course, they're very busy these days. So I'm going to turn the meeting over to her, and she's going to do a presentation to kind of help you guys find a way to find funding and access to get your businesses growing.
Okay, great. Thank you very much, Darrin. I'm with the Small Business Administration, probably now one of the best known federal agencies because of our response to the coronavirus pandemic. We appreciate you inviting me to speak again. It's important that we get the word out to our entrepreneurs and our small business community about what it is that's available and what it is that we're rolling out. There have been many pieces of legislation rolled out in the last year and a little over a year. So we're trying to incorporate those different pieces of legislation as soon as possible into our vernacular of education that we're providing to the small business community. So do you want to start the slide presentation, Darrin? Okay, great. So this is our brand new slide presentation on the COVID-19 economic relief overview. It will talk about all items that have rolled out because of legislation pieces just such as the CARES Act, our PPP Flexibility Act, the Economic Aid Act that happened at the end of December of 2020, and the new American Rescue Plan Act, which was signed into legislation in March. So the best thing that I can point you towards is we have updated our website. Before, you would go to visit the website called sba.gov/coronavirus relief. We have gotten a little bit smarter in that now we have shortened that. So now it's just sba.gov/relief. And you'll be able to find everything about these programs all in that website. There are sub websites underneath for each of the programs, but we're going to do kind of a top level overview of those today. Go ahead, Darrin. So this is the agenda items. We'll talk not only about the items that we have that are loans, but also our grant programs and our payment programs. There will be an update on a few other programs that are now rolling out because of the American Rescue Plan Act. And then at the very end, I'll provide some additional assistance and resources that our small business community can rely on. Go right ahead. So in late February and early March, the new administration, the Biden-Harris administration, and our agency took steps to ensure that there was inclusivity and equitable relief for our smallest, hardest hit mom and pop businesses here in the United States. those that anchor our neighborhoods, and then obviously help families to build wealth. The American Rescue Plan Act, I've already mentioned, was signed into law in March, and it provided some additional relief and additional programs for, again, those that were considered hardest hit in our small business community, while trying to make sure that we are, being good stewards of the federal dollars that have been assigned to our agency. And then later in March, our president also signed the PPP Extension Act of 2021, which allowed us to extend the time frame for that program as well. We are trying to work diligently and as quickly as possible to roll out these new programs. We are actually just over a year old in our PPP program. The EIDL program has been around a bit longer, but some of the ones that we're going to talk about today are actually brand new programs. So you can go to the next slide, Darrin. So we've got this chart up here to show you the different programs that are out there and available, and where they kind of fall in the spectrum of SBA programs that we offer. We have our loan programs. Many people know about our Paycheck Protection Program, what we call the PPP. They may not know that in response to this pandemic, the SBA has provided debt relief on our existing 7A, 504, and microloan programs, where SBA actually picks up the payment, the principal and interest payments on those loans for our existing borrowers. Just a little way for us to help people to kind of manage the pandemic and being able to stay afloat. We also have, though, what are considered payment and grant programs. We do have our economic injury disaster loan that is still under the loan program side. It is a program that has been around for many years. It's typically rolled out on a regional or local level when we have a response to a natural disaster, such as down here, a hurricane, or it could be an earthquake, it could be a tornado. Typically, things like that, we need to not only provide a response for physical damage, but also for economic injury. So our agency used that program as a tool for the pandemic response for businesses across the nation and our U.S. territories. We also have the grant program that was rolled out through the Economic Aid Act, called the Targeted EIDL Advance. And we're going to have a slide on that a little bit later. And then upcoming, because of the American Rescue Plan Act, we also have a program called the Supplemental Targeted EIDL Advance, which again, we'll talk about a little bit later. Just today at noon, we opened up the application site for this other brand new grant program called our Shuttered Venue Operators Grant. That came about because of the enactment of the Economic Aid Act at the end of December of 2020. And like I said, today it's open for applications. And upcoming, we will have what's called our Restaurant Revitalization Grant. Again, the ones that say that they're upcoming are not open yet. We are still building out those programs, but you can always check back at our website, which is sba.gov/relief, for the latest information on that. Go right ahead to the next slide, Darrin. So we want to first talk about our PPP program and some of the top takeaways, not only from the Economic Aid Act, but also from the American Rescue Plan Act. Basically, what happened was we allowed for an expansion of eligibility for some newer types of firms to be eligible for PPP with these two pieces of legislation, and an expansion of the ways that the funds could be used. The borrower actually now is in a better position with these this loan program, because the covered period, which is the time frame where you are expending the PPP money, can now be unique to your business. It has to fall sometime between an 8-week covered period at a minimum and a 24-week covered period at a maximum. Before, you had to pick between one or the other. Now you can truly tailor it to your business. It does allow for a second draw PPP loan. So if you had a first PPP loan done last year when we had our first round of funding, that's actually considered a first draw. Since we opened the funding in January of this year, now there's an eligibility for people to be able to get a second draw as long as they can meet the eligibility criteria. Additionally, there was a portion of the legislation that addressed the deduction of expenses that are covered within the forgiven PPP loan debt on federal taxes. Previously, businesses were not eligible to deduct those expenses on their federal tax returns for their businesses, now they can be considered deductible expenses. Additionally, we were required to and have performed a creation of a loan forgiveness form, an application form that is actually simplified for those loans of $150,000 or less. We had currently already rolled out that simplified form for loans of 50 or less. So what we did is now we've included all loans under 150,000. And based on the information that we have from our last funding round in 2020, we know that the majority of loans were actually done in that range of loan amount. So it should ease the forgiveness application process, if you will, to use the simplified forms rather than the other forms that we have available. And additionally, we are no longer deducting the EIDL advance. That was the cash grant that was rolled out because of the CARES Act. Initially, we were deducting that from loan forgiveness on a PPP loan. Now we are no longer subtracting it. So you truly can get 100% forgiveness on these loans. Go to the next slide. So we did take some steps earlier or in February and March to, again, make sure that we are prioritizing the equitable relief to our mom and pop businesses. We actually shut our program down for a 14-day exclusive period where we were only accepting applications from the smallest of businesses and nonprofits, those that qualified with less than 20 employees. That ran from February 24th to March 9th. Since then, we have opened it up to all applications, but we wanted to give a little bit of an advantage to our smaller firms to be able to get in there and get their loans processed by our lenders. Additionally, we have made some changes that will increase support for independent contractors, our sole proprietors, and eligible self-employed individuals, which we're actually going to discuss on a slide. I think it might be the next slide. So this is what we were talking about, where we're helping out those people that are sole proprietors, independent contractors, and the eligible self-employeds. We've actually updated the way that we are calculating loans for what we're considering, we call them the 1040 Schedule C filers. So if that is how you are capturing your business revenues and income, then Schedule C filers now get to use the gross income rather than the net profit in order to calculate their loan amount. So if you're looking at your Schedule C form, formerly what we were using was line number 31, which was your net income from your business. Now we're looking at line number 7, which actually is the gross revenues or income from your business. So it allows for those Schedule C filers to get a larger loan amount. However, it is not, in fact, retroactive for our Schedule C filers who submitted their application using the older form. The only way that you could make a change depended on where your loan is in the pipeline of getting processed. So if you submitted the Schedule C PPP application prior to March 3rd, then you're actually need to speak with your lender to see whether or not that loan application can be withdrawn or canceled so that you can use the new form and therefore take advantage of that larger loan amount. But if the loan's already been dispersed and our lender has already filed what we call a Form 1502 report, then we can't cancel that loan and it will not allow you to make any changes. So it's a very short window for our existing borrowers to go back to their lender and find out if they can make changes to it. This applies not only for your first draw, but also for your second draw loans. So if you had a first draw and you weren't able to capitalize on this, the fact that we've now extended the program for a few more months, you might still be able to apply for a second draw and be able to take advantage of the larger loan amount. Go to the next slide. So we had expanded our eligibility for this so that, again, we were trying to promote fair and equitable relief throughout the program. We had some factors that would actually disqualify people for applying for the loan. And one of them was that we had said prior that if you had a non-financial fraud felony conviction, that would keep you from being able to be eligible for our loans. Now we've actually lifted that restriction for the owners, as long as, again, it's a prior non-financial fraud felony. Additionally, we eliminated the restriction on businesses that are owned or controlled by owners who are currently either delinquent or have defaulted on federal student loan debt. That is no longer an eliminating factor. And we also provided clarification since this particular loan program is eligible to be applied for by businesses that have non-US citizen owners. We had difficulty with our program as far as what type of identifying number. Usually we use an employee identification number, an EIN, or a social security number as the identifying number. Those people that are foreign born may not have those documents or those numbers. So what we did was we allowed them now to use what's called the individual taxpayer identification number in order to use that as the identifier for their PPP application. So again, just added more clarification to our lenders so that they would be able to still work with the small business community to make sure that everybody that has is eligible for the program can actually apply for the program. Go to the next slide. So we had a little bit different terminology because of the Economic Aid Act that was passed. We had to differentiate between a loan that you had received in the first funding round and the loan that you would receive in this round. So we came up with the words first draw and second draw. So this kind of clarifies what's considered a first draw loan. Obviously, a first draw loan would be someone who had not received a PPP loan in our prior funding round, so prior to August of 2020. However, we still maintain that the business must have been in business in order to be eligible. You had to be in business by February 15th of 2020. Again, I mentioned before that we now have flexibility and it's retroactive back to the beginning of the period where the borrower can set an individualized covered period that has to be somewhere between 8 weeks and 24 weeks after disbursement. And again, the covered period being the terminology we use for that time frame when you're expending the PPP funding. Again, there are additional types of entities now available or eligible to apply, and we're going to cover those on the next slide. There is an addition of covered eligible expenses that are expanded. The basic makeup of the loan did not change. The overall point of the program was to provide funding assistance for businesses to be able to pay their employees. So you're still required to spend at a minimum of 60% on payroll expenses and a maximum of 40% on non-payroll expenses. We've just provided a couple of extra categories where you can actually expend, make eligible expenses on it. And currently right now, because of the Extension Act for the PPP, we have until May 31st of 2020 to accept applications or until we have exhausted all of the appropriations that we've been given by Congress. So that's a good thing because we still have some money left over. Just over 70 billion is what I've been told. So we are glad to get some additional time to make sure that those businesses that need the funding have the ability to go in and access those loans. Go to the next slide. Eligibility, again, you have to comply with the size standards, typically not more than 500 employees. I mentioned already that you have to be in business by February 15th of 2020. We had some eligible entities already with the program, but we added some additional ones because of the American Rescue Plan Act. So there were certain 501c3 nonprofits organizations now available and certain internet-only news and internet-only periodical publishing organizations are now eligible. But still eligible under all those other legislative acts that we had are our sole proprietors, our independent contractors, and our self-employed individuals, business entities such as partnerships, both C and S corporations and LLCs, tribal businesses are still eligible, along with 501c3, which are considered nonprofit organizations, and 501c19, which are veteran organizations. The Economic Aid Act actually added the final 4 bullet points on this slide in that we allowed now housing cooperatives, destination marketing organizations, certain 501c6 organizations such as chambers of commerce, and certain news organizations to be eligible. So we've kind of broadened the scope of who could actually be eligible to apply for this program as we've gone on. Go to the next slide. There's a second draw. Again, I mentioned that this now first draw and second draw is the nomenclature that we're using. The second draw loan means that you had previously received a PPP loan in our previous funding round or during this current funding round. However, we've changed the requirements of eligibility for this second draw a little bit. You have to have no more than 300 employees on your payroll, and you have to show that you had suffered or your business had suffered a 25% reduction in gross receipts. This maximum loan amount is a little bit different also from our first draw. The first draw loan is eligible for up to $10 million. The second draw is only eligible up to $2 million. And we do have, go to the previous slide again. Okay, so we do have some guidance out there that the first draw and the second draw PPP loan covered periods cannot overlap. So that's important when you're looking at whether or not you're going to have availability to go for a second draw if you've only gotten your first draw in this first round funding. And again, I mentioned that you have to demonstrate at least 25% reduction in gross receipts. And what we're looking at there is a comparison between comparable calendar quarters in 2019 and 2020. So an example would be that if my business in 2019, say in quarter 3, was generating revenues of about $10,000, then when I look at the same quarter, quarter 3 in 2020, the business would need to be generating 7,500 or less in order to show that 25% reduction. Go to the next slide. The application process has not changed. You do not apply for PPP directly with the SBA. You need to find a PPP lender. But we have a couple of tools that are listed on this website, on the slide, that you can utilize. Our lender match program can be used to help match you with a lender that would be interested in doing your PPP funding request. Additionally, we have a mapping tool where you can put in your zip code and it will identify lenders that are close to you in your area that might take your application as well. You can always work with one of our resource partners, and that's the third bullet on the left-hand side. Again, it's a mapping tool where you put in your zip code and it will provide you contact information and locations of which resource partners are located near you. You need to obviously complete the application. Here's where you need to stay in contact with your lender. The lender is not necessarily required to use SBA application forms. So they may stand up their own form, or they could actually do an online platform where you make the online application. So you need to contact the lender to find out how they want to receive the information. And that way you can make sure that you're applying in the correct way. Again, if you need help with the application, you can always ask for help from our resource partners. Additionally, after the lender reviews your application, they will actually submit the application to the SBA through our PPP loan portal. We were going to do some front-end compliance checks on that loan. When we had the earlier funding round, we were doing kind of automatic approvals. Now we're doing compliance checks on the front of the loan, and then we'll issue the loan number to the lender once we get it approved. But again, we're still working with the newly defined deadline of May 31st or whenever we run out of appropriations for this. So it behooves people to work now with their lender to get it in rather than waiting towards the end of the program, because we may be out of money at that point. Go to the next slide. If by chance you do not get your loan 100% forgiven, it's the only loan that we have that has a forgiveness aspect to it. But if you don't actually receive 100% forgiveness on your PPP loans, then the loan becomes a loan with a fixed interest rate of 1% that is non-compounding and non-adjustable. We are not requiring collateral or personal guarantees for this particular loan program, and there are no fees for the borrowers and no prepayment penalties if you decide to pay it off early. It will be booked with a 5-year maturity now. It is possible that if you got a loan in the previous funding round prior to June 5th of 2020, your maturity date may be a 2-year maturity. But if you want to ask your lender to extend that, you can do so, but both the lender and the borrower have to agree to that extension. If you, again, do not get full 100% forgiveness on this, then the payments will start once you know how much is left over from the loan that is not forgiven. And the lender is actually going to communicate with you and let you know how much your payment amount will be and when to start those payments. If you decide not to apply for forgiveness right away, the thing you need to know is that there is no deadline for when forgiveness applications need to be submitted, but there is in fact a deadline for what we're calling the payment deferment period. So your payments will start 10 months after the last day of your covered period. Up until that time, you're not required to make any payments on this loan. But if you don't go through the forgiveness process by that point, it is possible that you will start to make payments on this before you seek forgiveness on it. Go to the next slide, Darrin. And speaking of loan forgiveness, same as when you applied for the loan, you apply for the forgiveness through your lender. And the lender then will submit their decision to SBA. Again, these are kind of repeats of what we said before, but we're not going to be deducting the idle advances any longer from the PPP loan forgiveness amount. You can claim expenses that are covered and forgiven with your PPP funds on your federal tax returns. The IRS is going to be providing some guidance on that. It's not within the purview of SBA, but the IRS is the guiding agency on anything having to do with taxes. There is, again, the expanded forgivable expense categories I mentioned, and those are retroactive to the beginning of the program. So if you haven't yet sought forgiveness on your loan, then you can use those additional categories. If you've gone through the forgiveness process, it's not possible to go back and amend your forgiveness application. So you can't use it if you've already gone through the forgiveness process. But we do want to highlight that we do have the simplified application program or application form for those loans that are $150,000 and under. And per the CARES Act, which was obviously the first piece of legislation that kicked off the PPP program, forgiven PPP loans are not to be considered as federally taxable income. Again, that's per guidance that we're going to get from the IRS, but it's good for your CPAs and your accountants to know this, that you do not have to carry that as taxable income for your business once you get the loan forgiven. Go to the next slide. Now we are going to move on to what's we call our COVID-19 Economic Injury Disaster Loan. We like to use acronyms in the government, so we're calling this our EIDL loan because that's what those letters stand for. This, again, is a loan that you take out directly from the SBA. There is no other lender involved, but what it provides is economic aid to businesses experiencing a temporary loss of revenue due to the pandemic. The Economic Aid Act, again, extended the deadline for this particular program to December 31st of 2021. As long as we have appropriations, we will still be accepting applications up until that time. You can use this particular loan program a little bit differently than the PPP. It has to be used for working capital expenses and normal operating expenses, but it's not limited to just those categories that the PPP is. So you can use this for a continuation of healthcare benefits, rent, utilities, fixed debt payments, paying your suppliers, paying your unsecured business debt. All of that qualifies as long as, again, it's normal operating expenses, what we call normal monthly business expenses. The terms are a 3.75% fixed rate, interest rate for businesses, and 2.75 fixed for nonprofits. We're writing them at the longest term that we can. So all of them are being written at a 30-year term. However, again, there's no prepayment penalty if you want to pay it off early. Loans over $25,000 are considered or will be secured by a UCC filing. So what you'll notice if you get approved for this is that there's been $100 deducted from your loan proceeds so that SBA can actually secure it with the UCC filing. Loans under $25,000 are considered unsecured and do not require this filing. But it is open to most small businesses, qualified small businesses, cooperatives, and agricultural enterprises with 500 or fewer employees, or as defined by our small business size standards for SBA and private nonprofits. Go to the next slide. Here's the one thing that I wanted to mention that just changed. So we just opened up as of Tuesday of this week, the fact that we would be recalculating the loan amount for this program. I mentioned that it gives you some working capital assistance. Before it was based on 6 months worth of working capital and a maximum loan amount of $150,000. Now we are opening it up to 24 months of economic injury and the maximum loan amount being $500,000. Now, if you already have an existing SBA loan, an EIDL loan that you got out either last year or this year, you don't actually need to do anything right now to submit an increase. What you're going to do is receive an email from SBA, and SBA will provide you details on how to request that increase. We actually have stood up a separate mailbox for these requests. And so we would have dedicated resources just working on these increases. If you haven't yet applied, then you're eligible to take up to the 24 months of economic injury. It's available to you, again, up to the maximum amount of $500,000. The other thing that we had announced earlier was that we were offering an extension to the loan deferment period for these loans. So if you have an EIDL loan that was made in 2020, initially we were offering you just 12 months of deferred payments. Now the first payment due date is 24 months from the date of the note. And if you had the loan that was made in 2021, our current year, then your first payment due date is 18 months from the date of note, not 12 months. So again, we're trying to tweak the programs because we know that many businesses are still suffering from the pandemic and have not yet fully recovered. So, and it's good to know that these things are happening. I will tell you that the increased requests, our Office of Disaster Assistance is actually estimating that almost every loan that was made, and we made over 3 million of these loans through last year, will actually be in line to ask for an increase. So it will take us time to process all of them, but you will first be, like I said, contacted by SBA through email, and it will provide you details on how to request the increase after that. Go to the next page. This is the debt relief that I was mentioning that many people don't realize is happening, only because of the fact that the public is kind of focused on the PPP and EIDL loans. But SBA had provided some debt relief last year. With the new enactment of these last two pieces of legislation, we're continuing to do that for a short period of time. So for new 7A, 504, or microloans approved on or after February 1st of 2021, and through the end of September 30th of 2021, SBA will be paying 3 months of principal and interest after the loan is fully dispersed and after any deferment, but we're capping it at $9,000 per loan per month. You don't need to apply for this debt relief. It's something that SBA is working with your lenders to provide automatically. If you want to see, you should have already received a letter. Every eligible borrower was sent a letter from our agency, but we do have a sample letter out on our website if you'd like to see what that letter looks like. If you have questions about whether or not your loan qualifies for the debt relief, then you need to contact your lender, because they have, like I said, already been contacted by SBA to gather the information on what loans are eligible for this debt relief. Go to the next slide. The targeted EIDL advance. So this particular program rolled out because of the Economic Aid Act. There is no action required until the business is contacted by SBA via a direct email invite. And then you'll be told the procedures again on how to apply for this particular type of release. This is a grant program, not a loan program. It's brand new, even though it has the name of EIDL Advance, which was our cash grant program after the CARES Act last year. This is separate appropriations and a separate program completely. So targeted EIDL Advance is the new name, but it has different eligibility than what the EIDL Advance did last year. It's only open and eligible for businesses and nonprofits that applied for an EIDL loan, and either they were their businesses located in a low income community, they have suffered greater than 30% economic loss, and that they have 300 or fewer employees. You have to meet each of those criteria in order to be eligible for this. If you are actually eligible, what it provides to you is that, based on the amount of money that we have in the program, what it's going to do is balance out your previous EIDL advance up to a full $10,000. When we rolled out the EIDL advance last year, we used the methodology of $1,000 per employee up to a maximum of $10,000. So if you only got $1,000 because you're a sole proprietor, this will allow you to get the additional $9,000 to round it up to the $10,000. Additionally, for those that applied, but we had already run out of EIDL advanced money, which was about mid-July, this will provide, again, the full $10,000 to those who applied for an EIDL but didn't receive the advance payment because we had run out of funding. SBA has already been emailing businesses since the beginning of February on this. You have to then follow the instructions on how to apply to determine eligibility and to submit your documentation. Go to the next slide. Items that you may want to gather, though, to make sure that you can verify your eligibility and submit the required documentations are your 2019 federal tax return. It's actually recommended that you have this on hand when you're applying because they're going to ask for information on the application that actually relates back to your federal tax return. You want to make sure that you're using either the EIN or the Social Security number that you used in your original EIDL application. You also have to show the monthly gross receipts that you have for your business for 2019, 2020, and the completed months in 2021. Again, we're looking for that 30% economic loss. So you have to be able to show this information so that we can verify it. The confirmation that the information in your original EIDL application is still accurate. If you've had any changes to your business since you actually made your original application, that may actually require a manual review and some additional documentation to support the targeted EIDL advance application. Once we get all of the information, we will also ask applicants to sign what's called an IRS form 4506T, which allows the SBA to obtain tax transcripts tax transcripts from the IRS so that we can do further processing. Go to the next slide. The application process. It's only available to have one submission for each targeted EIDL advance that can be made. We need you to make sure that you carefully review the bank account information. You want to make sure that all information is 100% correct, but especially the bank account information, because due to the fact that we have limited money for this that's been appropriated by Congress, we're not going to be able to make reconsideration requests on this particular program. So you have a one-time shot to get this in and get it right in order to get the funding. But our overall goal is to get these processed within 21 days after we receive the completed applications. And we're actually not considering the applications to be considered complete until after the IRS form 4506T is received. And I will tell you that I know our headquarters office has already told us that they are actually sending these out already. So some firms have already received their targeted EIDL advance. However, if you have questions about this program, the status of your application, or anything else having to do with targeted EIDL advance, we've actually stood up a separate mailbox called Targeted Advance at SBA.gov. And that's probably where you will get the best information about it. We at the local level can't see into the database for the targeted EIDL advance. So we will not be able to tell you where you're at in the process. But if you're approved, what you're going to receive is an email from SBA, and then you'll notice that there's a deposit to your bank account that you've provided. Go to the next slide. So the Shuttered Venue Operators Grant is a brand new program, again, enacted because of the Economic Aid Act, but it is, as you see on the bottom of the screen, has been opened now since 12 o'clock noon today. Just started taking applications on this. We were given just over $16 billion in total that's available, and the maximum grant amount can be up to $10 million. It is open to eligible entities such as live venue operators or promoters, theatrical producers, live performing arts organizations and motion picture theater operators, relevant museum operators, zoos and aquariums who meet specific criteria, talent representatives, and there's a maximum of 5 business entities related via affiliation. So for example, 1 parent firm and 4 subsidiaries that also all meet the eligibility requirements. Plus, different from the PPP and the EIDL loan, the business need to have been in operation as of February 29th of 2020. Go to the next slide. What you need to do prior to application opening in April is to get your business registered in the federal government's System for Award Management, what we call SAM.gov. You also want to review the often updated, I believe it's about once a week, frequently asked questions. We also have out on our website the preliminary checklist and eligibility requirements. And we have video tutorials, not only on how to how to get yourself registered in SAM, but also for different types of entities. And you can find that all on our website for this particular program, which is sba.gov/SVO grant. Determine the potential grant. It will be the lesser of $10 million, or if your business was in operation on January 1st of 2019, it'll be 45% of your 2019 gross earned revenue. If you began operation after January 1st of 2019, it's the average monthly gross revenue for each full month in operation during 2019 multiplied by 6. Go to the next slide. This is a little cross eligibility chart, if you will, depending on which program you may have applied for and those that you may have already received. It's kind of a, either or, you're either a recipient or you're an applicant. So you can determine whether or not you can apply for all of them or none of them. So you can go to the next slide. It's also available out on our website. So these are the new programs that I mentioned because of the American Rescue Plan Act. They're not necessarily open yet, but they will be opening soon. So this one, again, is targeted at different types of industries and businesses that seem to be the most hardest hit. The first is the Supplemental Targeted Idle Advance Payment. So this is different than the Targeted Idle Advance program. But it does allow for additional money. We received an appropriation of $5 billion that allows additional $5,000 payments for those hardest hit. I can tell you that I believe it's for businesses that have 10 or fewer employees. That's one of the criteria on it. But you can go to the SBA website. Again, we have a separate website for this, sba.gov/targeted advance, and that will give you some additional information on the supplemental targeted idle advance payment. Another program, the Restaurant Revitalization Fund and Grants. Again, Congress gave us an appropriation of $28.6 billion for this fund for grants to eligible entities in this hard hit industry. We don't have a lot of information about it yet. It is still being kind of put together and created, but what it's going to offer is a maximum $5 million grant per location with an aggregate maximum of $10 million total grant available. But again, it's a wide range of what qualifies for, it's called restaurant, but it's open to more than that. And we'll, again, be standing up an individualized website for this once everything is put in place for it. But we wanted to kind of give everybody a sneak peek at what's coming. The last program is our Community Navigator pilot program. Again, we received an appropriation through the American Rescue Plan Act of $100 million, which will provide grants to eligible organizations supporting efforts to improve access to COVID-19 pandemic assistance programs and resources. 75 million will actually be going to support outreach efforts, including the creation of a telephone hotline for information and referral services. So more to come on this. We do have a website set up for this, sba.gov/navigators. It will give you the overall background on how this program is supposed to work, although it is not yet open to take applications yet. Go to the next slide. The key takeaways. I think the key takeaways is next. Yeah. So again, it's just to kind of give you a flavor of what's out there and available. Not every program may be something that you are eligible for, but we're just trying to pass along the information that we do have a lot of different programs, whether they be loan programs, payment programs, or grant programs based around the legislation that's been coming out since the last year. But all of them are, again, the spirit of this is to help those who have been the hardest hit from our pandemic. And we do have other programs, like I said, that are in the midst of being rolled out. So we'll have more information upcoming in the next few weeks on not only the supplemental targeted idle advance, but the restaurant revitalization grant as well. Go to the next slide. Okay, so local resources. We have a website for our office. the South Florida District Office of the SBA, which is the first link up on the screen. There you can find not only information about our office, but we have an online calendar. And we capture not only information of what our office will be doing, whether it's trainings or outreach, but all of our resource partners and their training and outreach efforts are out there as well. I wanted to reiterate the location of the website for finding our resource partners. It's sba.gov/local-assistance. Again, our office is still virtual. We're not accepting anybody from the general public. I don't know that our resource partners are either, but many of them are doing cyber counseling or email counseling right now. So you just need to put your zip code in, and it again will pinpoint those resource partners that are closest to you. And then we have our YouTube channel for the South Florida District Office. That's the third link on the screen. It's a little bit long. So if you just go into your regular internet search engine and do SBA South Florida District YouTube, it'll pop right up. But we have a lot of different educational presentations and recordings out there as well. Go to the next slide. Okay, so let's see, stay connected with us. We do have an agency-wide e-newsletter, which you are eligible to opt in for. You can follow or visit our website at sba.gov/updates. All you have to do is put in your email address and you'll be added. If you put in your zip code as well, you'll be added to your local SBA district office distribution list as well. We do have a social media through our Twitter account. The first account on there is actually our agency account. The one that's highlighted is the one that we use for the South Florida District Office. So if you want to go in there and start to follow us, then you'll make sure that we always are providing information about changes to our programs on Twitter. And we do have an Instagram channel as well. That's an agency-wide one. So, we're often uploading information there as well for those that are on Instagram. The best way to contact our office is actually via email. As you can probably guess, our phones are kind of ringing off the hook right now, but email, we have people that are dedicated each day to answering those inquiries that come into our email box. And that email address is southflorida_do@sba.gov. The other links that are listed on the screen are the ones for the different programs. The top one is the one that actually probably is the one that you should memorize, which is sba.gov/relief. All of the programs that I talked about today are actually under that particular, that's kind of the umbrella website. The other ones are all individual ones underneath that. So you can always find information on PPP, EIDL, and the SBO grant at the relief website. Go to the next slide. And I think that's it. Now we're ready for questions.
Okay, well, thank you very much for that insightful presentation. I know we have some guests here, so why don't let's see if they have questions first before we start asking our questions. So if you guys have a question, you can send your questions in the chat or Q&A here. In the meantime, Peter, do you have any questions?
Yeah, I was going to just say, fantastic presentation again, Janelle. I mean, this one's even better from the last ones because all the questions I had, you answered these. I mean, I've got a lot of veterans that, continually ask me about these programs, especially the SVO that just came online.
Right.
And my God, you left me speechless. No questions. I mean, you nailed them all. I mean,
I wish I could take credit for it, but it is in fact a standardized presentation that our headquarters office is putting out. But I believe it's also very comprehensive, and we appreciate that we are able to provide that kind of level of detail to our small business community so that they can get the most information out of it without having to go through like the interim final rules that we have that are more in government speak. So yeah.
You're doing a tremendous job. And I'll be sure to get this, back into the community, especially with veterans. I'm, closely tied with veterans. So
great.
This means a lot. And it'll be a lot of good news for a lot of people.
Great. Appreciate it. Thank you.
I do have two questions. Can you explain what the 7A program is again?
Sure. Yeah. So in our normal mode of business that we would normally do, we do have a guaranteed loan program. a couple of them that we actually utilize to assist businesses that maybe can't seek traditional funding through a normal lender. They may be riskier because of the fact that they are a startup. It could be that they have, not as much collateral to offer, but there's some sort of inherent risk to the loan application that would require our lender to then look to SBA to guarantee a portion of that loan. Our 7A loan is our most widely used. It's kind of our flagship loan program. And it can help people from, as little as $5,000. I've seen SBA loans at that level up to a maximum of $5 million. Depending on the program that our lender uses, it can be anywhere from 50% guarantee on our express program and on up to our international trade programs, which actually have the highest guarantee of 90%. So again, it makes our lenders feel a little more comfortable to do a deal that they normally wouldn't be able to do with their regular credit criteria.
And for that loan, you had to go through the lender to get access to it.
All of our other loans, you have to go through a lender first. Yeah. SBA, the only thing that we are a direct lender on is our disaster loans, such as the physical disaster damage one and the idle loan. Those are the only ones that we actually do directly. Correct.
Okay. And what is the 504?
So the 504 is the kind of a sister program in that it is used for fixed asset financing, meaning you're looking at either commercial property or you're looking at heavier machinery or equipment for your business. It doesn't include working capital, which the 7A does. So you can use them both, one, the 504 using just for your fixed asset financing, and then you can use the 7A as a partner loan for the working capital, or you can decide to fund everything under the 7A, because the 7A will also do commercial real estate and the machinery equipment. But the good thing about, I like to promote the 504 program because it's widely underutilized in my mind, only because it provides where you don't have to have as much money down. Typical down payment on that is a 10% investment from the borrower. We do 40% of the financing. There's another first mortgage lender that does the other 50%, but our rates are fixed for anywhere from 10 years on a piece of machinery or equipment up to 25 years on real estate. And right now those loans are under 3% for SBA's portion. So, it's very, very affordable. Typically the only collateral you offer is that piece of machinery equipment or the real estate. So it frees up, if you use that loan, the ability to seek financing with your other business assets, whether it's inventory or accounts receivable. It doesn't take all of your collateral at one time. The 7A typically is going to kind of be as fully secured as possible. So where, it might work better for you, but I like to promote the 504 program because I think it's underused.
So both of those you would need to go to the lender and say, I want to get this particular loan.
Correct. Well, you can start with the 7A at one of our participant lenders. The 504, I always suggest that people start with our certified development companies that actually process SBA's portion, because you don't have to have a lender that's willing to do the deal. The CDC may be able to find you a lender. And so they do a real quick intake of whether or not you're actually eligible loan first before you actually get a lender involved with that.
So basically the 504 is more like something that's going to be assets like equipment or
heavier
real
assets,
estate.
correct.
Okay.
Okay. Yeah. The other thing about that program is that it requires job creation. Our 7A program, we don't require that you create any particular amount of jobs. With the 504, the emphasis of that program is job creation. So for every $75,000 that you actually get as part of the loan, you're required to create at least one job to support that amount. So again, another great aspect of that program is that we know that these businesses are required to create jobs, and therefore they, have to report back to our lenders that they've done that within the first 2 years of getting the loan. So.
Okay. All right. Any more questions, Peter?
Just quickly, do those loans, the 7A and the 504, have any type of caps?
Caps, just $5 million. Yeah.
$5 million?
Yeah.
Okay.
The 504 can go a little bit higher if you're doing some sort of specific building that's considered like energy efficient. You can go up to 5.5 million, but yeah, about 5 million is the maximum that we do. Now, the other thing with the 504 is that our portion is 5 million. So if you're going to finance something that's a little bit larger, it would probably be better to work it under the 504 program, because the 7A is capped at 5 million total.
Great. Good to know.
Okay, well, I guess we don't have any questions from the audience, so we'll go on. So again, I just want to say thank you, Janelle, for all this information and helping us, get the word out to the community. And of course, we'll have you back very soon. And we want to thank you guys for attending. Join us every Thursday now. This is called BizTalk Thursday, so it's at 1 o'clock. And you can contact us via email at team@startusunited.co, or you can go to our website to find out when the next session is going to be and also get access to the recordings. This presentation will also be on the site. Probably going to be sometime next week, so just continue to go back and look at it. Peter, do you want to say any last words?
No, you've capped it all. Look forward to seeing everyone for next week's BizTalk.
All right, thanks for attending, and we'll see you next week.